Ryan, the last since I last saw you, it's been
Hmm.
pretty darn exciting out there in Tesla land.
Right.
We had a lot of activity and a lot of stock movement, not necessarily in the right direction.
Yeah.
But why don't we start there? Because everybody always wants to know what you think is going to happen next with
Hmm.
regard to the stock. So I was kind of blown away last night with all the overnight activity.
Hmm.
I think yeah, we had a low of 25 overnight and a high of 50 overnight. That was pretty crazy for I mean, that's not usually as volatile in
Hmm.
the overnights. And then today we continued to have pretty good volatility from, I think, also from 25 I mean, for 425 to 440. But anyway, uh,
Hmm.
what are you seeing now? What do you think? Why do you think it went down? Where do you think we're going?
So I think it went down because the inexpensive, affordable 3 and Y weren't as affordable as people were hoping, weren't as much of a breakthrough as people had been, I think, expecting. But it wasn't hugely out of line. A lot of people were expecting the 39, just under $40,000 for the Y. And the decontenting like that. The leaks were pretty accurate on that. And then there was also the Model 3. Sorry. So that's why we sold off again. So it was like we sold off on the volume numbers, which were good, and then we went down, and then we went up on hopes that the new car would be really great. And we got the new cars and it was uh, in line with expectations. So then there was some sell off on that, but we're still in a range.
But in the
So
middle,
I think
wait a
yeah,
minute,
yeah, yeah,
before we go to the technicals, we also had FSD 14.1 in there,
right.
which
There's the 41.
certainly was not under hyped. I mean,
Right.
overhyped. It was certainly on again on what maybe most people were expecting, but outstanding in every way.
Yeah.
And yet we were going down after the FSD 14 was released, even
Mhm.
before we got to the other cars. So was this just selling on the news, or what do you think?
I think that for us close watchers of Tesla, we really care about FSD 14, 14.1, seeing that's better. But I think the institutions want to see
No.
removing the driver, removing driving monitor, rolling out robotaxi, getting revenue attachment rates to see that convert into more traction and money, right? So this was us getting an early look at it. So I think that um, as we see it get better and better, that when it makes that transition, so whether it's in 14.2, 14.3, those are been coming out back to back, or whether it takes a step to the 15 to do it to get to the point where it's fully solved. It's kind of like the institution, those analysts don't care about the March of Nines, right? Until you get to the point where it's completely solved
Right.
there. So I was expecting that to move the stock um, when you have major breakthroughs on the volume of cars
Mhm.
and removing the safety monitor driver. These are kind of like preamble steps to it that are not as uh, financially relevant yet.
Okay. All right. I did enjoy one of the analysts today who was mentioning FSD. He was kind of breaking it up in
Mhm.
terms of the different parts of the business and saying, look, I consider the actual vehicles themselves to only be worth, $100 or whatever. But he
Mhm.
looked at FSD as being worth $80 all by itself because I mean,
Mhm.
you make more money on FSD per vehicle that as long as you
Mhm.
get the uptake than you do on the vehicle itself. So if we,
So I don't get that argument of the cars are only worth $100, right? Because then why did we move up like
I know
50 bucks or whatever on the hopes or more
Model
of
3,
Model 3 and Model
Model
Y,
Y. Yeah, yeah,
right?
yeah.
And then we drop 40 bucks. So that'd be like you know again that doesn't make sense. Then everything moving FSD like no one's they said no one's reacting to FSD.
Right.
right? So if everything is on Robotaxi and FSD, and then something major happens there and doesn't move the stock, how does that make sense that we're trading on that? Like the Gary Blacks of the world and all those kind of things. It's like huge announcements on the Robotaxi side, huge announcement on the FSD, and the stock is like nothing, doesn't care at all.
Yeah. Yeah.
And then it's rumors of um, a cheaper model, um, disappointment about the pricing of it, and the stock is moving all over the place. It seems it's moving on that.
Yeah. Yeah.
So
All right. So what do you think about the technicals? Where are we now? Are we out of trouble, at least with regard to the Model Q actual I guess I can't call it Model Q anymore. I have to call it Model S or something. Is that all the negative we're going to get out of that? And now we're back to the regular kind of
trading, yeah, it seems we're pretty much priced in, and then we're creating more congestion zones where it's like, we're stuck between various levels and then creating more lines because the more we stay in some area and squiggle around, and the more it can say, okay, look, there's a line there,
yeah,
there's a
yeah,
barrier there.
yeah.
So,
Yeah, 410, 400, 410, 425, 440, 444. I've
yeah,
almost got them memorized now.
right. But
So,
but the positive thing to that,
yeah,
in terms of like, is that now that we're kind of like stuck here,
yeah,
is that it's tougher. There's more buyers as we dip down. And people go, okay, now that's a bargain.
yeah,
Now that I've kind of established here's a fair price, then if things go down. But and then we're coming up to some positive news that we're going to have, I think, a very positive call on the 22nd. The numbers are going to be good.
right.
Um, and for people who say the numbers don't matter,
Yeah.
that would mean that the deck will drop. We'll see the EPS, and then it'll positive or negative. The stock is just going to stay there, and it won't.
Yeah, right.
It won't, right? So then that goes to the people saying that it doesn't matter, and then we'll see some kind of like movement on it, up and down based on, people reading the deck and doing stuff, because it still matters. And then, but then the actual call, I'm anticipating to be very, very positive because Elon's going to say really good things. So,
So I haven't seen any analyst, I haven't seen one analyst yet change their EPS. So we're
mhm.
still sitting at, depending on who you believe, 39, 49, or 59. Actually, I think almost all
Mhm.
three of them are ending in a nine. So
Yeah,
depending on who you're reading, tip ranks are, the different ones. It's 39 to 59. Well, 59, that might be close. I think it's going to
right.
be at least 65 and probably 75.
Yeah.
But in any case, I think it beats all three of those, and yet nobody has even moved their EPS up.
Yeah, yeah. It's going to be 60 to 80 cents. It can swing around again based on reg credits, currency movements, all that kind of stuff. So there's a bunch of things, and then things like um, charges for factory upgrades and various other
Right.
things. So there's a bunch of stuff that can move it that we don't really know.
No.
You'd be guessing what it's going to be, but we know the numbers, and we did get 20 to 30 cents more because we got better numbers. And like the high production number, 497, was a company with, well, although I've heard I remember now from the other guys that Brad Ferguson and those guys say that when you have way lower production, you don't perfectly align because they do some kind of like accounting smoothing of all that stuff, so it's not quite as impactful as whatever. Which then goes against to a mushy 60 cents or something like that.
I see that there's at least a nickel and maybe a dime in the cars,
Mhm.
more than expected, and well, more than last quarter. And I think it's 20 cents on energy.
Yeah, I think so too.
Okay. All right. Well, all right. So then Tesla Chan came out today. He says Tesla Shanghai Super Factory. I didn't know they called it the Super Factory. Okay. The Tesla Shanghai Super Factory delivered more than 90,000 vehicles in September, with
Yep.
sales in the Chinese market topping 71,000, up 25% month on month. So I thought, okay, I got to go back and find out what the records are. So the record for the total is 101. And
Hmm.
the record for China for 1 month is 74. So
Hmm.
we're bumping right up against the records. So that started getting me thinking, okay, what does that really mean for quarter four? Because you and I have already said we thought we'd have mirror quarters,
Hmm.
and people have been laughing at us. So,
Hmm.
so most people think that we're going to drop like a rock.
Yeah.
So let's look at it here. Okay, so let's look at 241 was third quarter
Hmm.
for China.
Hmm.
90 was just our most recent quarter.
Hmm.
What do you think we'll do in the fourth quarter in China?
Um, I'm expecting about 30 to 50,000 more from China because of the YL.
So
That
270 to 300.
yeah, yeah,
Okay.
yeah. Because the YL had 4,000 in a week, so I'm presuming they can repeat that, and indications that it could get really, really good and get to 7,000 per week, which would be 80,000, which would potentially add as much as 70,000
Right.
to the production. But then maybe some cannibalization of the existing Y or something like that to
Well,
get to
but they
60,000.
also haven't offered it to the other markets yet. So
Right.
right now it's only in China. So if they did see the
Mm.
beginnings of selling out, they could just open it up to more markets.
Right. Right.
Okay, so then European Union.
They said that they expected that recovery to be there and that they would have um, closer to their production rate, which I think can go up to 1,000 a day. So 80,000, 90,000. So up, I think they have 65,000 like that in Q3. So they could get another 15 to 20,000 in Europe.
So and of course this fourth quarter. So
Yeah.
typically Europe does well in the fourth quarter. Okay, then we've got the US where people are saying that they're kind of anticipating about a 30 to 40,000 drop from the pull forward
Mm,
on the Model Ys and Model 3s in because of the $7,500. So already though, that if it's true that it's 30 to 40,000 fewer in the United States, we've already made that up
mm,
just with what we've talked about in China and Europe.
mm,
And people are maybe forgetting we've got a performance that has
mm.
just been announced. The
Right.
performance is going to, I'm sure, going to do very well. It's a phenomenal car.
Yeah.
Then we just got the Model 3 and the Model 3 and Model Y standards. Now the Model Y doesn't start shipping till November. Model 3 standard doesn't start shipping till December, but we're going to get some units out of that.
Right. Right. And there were the units that were sold in Q3 that don't actually get built and delivered, because they had the extra sales because they say, okay, you
Right,
can pay for it
right.
and then we'll complete them. So that is also, yeah, I know, 10,000, 15,000 units, something like that.
Yeah, yeah. Could be 10, could be 50. Yeah, we don't really
Yeah.
know. All
Right.
right. So what I think you and I just did was we said that our theory, I don't know, 2 months ago, that these would be mirror quarters at around 500,000 is
Mm,
very much provable by the actual numbers with, taking a look at them realistically, we could be
mm.
looking at 500 plus.
Right. Right. I agree that could happen. Um, yeah, I don't see us losing that much that counteracts a solid China and Europe for the United States. And that boost from YL for China can carry over into Q1. So Q1 shouldn't be that bad either.
So I'm always expecting a 20% drop, 25% drop in Q1 just because of seasonality, because of,
Mhm,
people don't buy as much because of
mhm,
Chinese New Year, because of all the stuff that happens in first quarter. But so I'm only figuring around 400, 420 for Q1. But in Q1, we'll be shipping semi trucks. We'll be doing something with cyber cabs. I don't know whether we're shipping them or putting them into use, but one way or the other, the cyber cabs will be coming out. And then also in the fourth quarter, the energy number will go up again, almost certainly.
mhm.
So I'm thinking we might get another 20 cents out of that. I
Yeah.
think it would be realistic. We picked up 30 gigawatt hours, and I think that's going to be about 20 cents. We could easily get from 12.5 to 15.5. That would be my low number. So that could be
Yeah.
another 20 cents in the fourth quarter there. And we should pick up we should pick up the reserves on, I think, in the fourth quarter, we're going to pick up the reserves on FSD.
Right, right.
I did ask Grok, and I didn't go back and find out. Let me see real quick. I might be able to get it here. If Grok gave it to me, I was sure. He already put it in history. What's wrong with you? Let's see here. Let's see. 14,000 cars a total. No, that's separate. That's not the right one. Okay. I can't find it. I was hoping I could get it real quick. But there's some kind of reserves. I don't know what the number is, but we could be picking up billions at least in reserves when they finally do decide to take the rest of the FSD money.
Right, right. That would be, but then they always say the analysts, back those out because they
I
say,
understand. I
but
understand.
then it would going forward, it would mean
Yes.
more recognition of revenue going forward. Yeah,
And then in the first quarter, we will pick up more energy yet again.
right.
So if I'm right, if we're 15 to 16, something like that, I was thinking maybe even as high as 17 in the fourth quarter. We could be at 20 or 21 in the first quarter, which would make up for a bunch of missed vehicles.
Right. But I don't think the vehicles will be that bad. I think you'll be selling quite a lot of the standard vehicles. Probably, I think they were saying they introduced them in Europe as well.
Right.
And I think that they would be able to introduce them in China as well. So I think the introduction of them in China and Europe would be the bigger thing
Mhm.
that they need to, they're far more price sensitive on that.
Right.
And their TAM is far bigger when that happens. So if they get the standard model introduced in China and in Europe, then we can see a potentially a lot more sales. It's a question of like how much production can we get out of China and can we increase them in Europe? Because I was looking at some videos of the Giga Berlin factory. Someone did a tour there. I looked at the Tesla China factory for the YL, and it looks like they're putting technology in there to increase the production of vehicles.
So now you had some slides, I think, on some of
Yep,
the,
I have some
uh,
slides
we,
on that.
we had this, on Monday, we went into a lot of detail
Mhm.
about the China video.
Mhm.
And we had some people do a little clapping back about
Yeah.
some of the numbers, but you've gone ahead and you've done a little more exhaustive kind of study. Let's hear what you found out.
Yeah, so there's this other video, sorry, that no one questioned the provenance of, that it did come from Tesla China. It was on Teslarati, and it shows um, the what's the inside of the factory. And here's one of the pictures where you have like 6 or 8 machines that are surrounding a vehicle, and they move in and out against that in the video. Um, and then compare that to a picture from the unbox process
Mm,
um,
mm,
patent. So, moves on to exterior features, adhesive applied to exterior panels and stuff like that. So getting to some kind of density of machines around the vehicle to apply a bunch of things to it, using adhesive for body panels and stuff like that, looks like it's happening in
mhm,
China.
mhm,
And
mhm.
then throughout that video, it's a lot of machines moving a lot of parts and virtually no people. So it looks highly roboticized. Earlier videos from 2 years ago, or even some of them in Europe, show similar scenes and areas of the factory with a lot more people
Mm,
involved, where
mm.
they're, doing some bolts to put and welding to put in various parts. And it seems to be far less of that. Here's where they have a glassed off area in the China one, where they have a machine taking a body panel and moving it between different sections of it. A similar area in the Berlin factory might still have a machine moving that part, but they haven't enclosed it where it's just the machines,
I see.
where people might still be doing something. Of course, we still have the gigapresses, they're the same. Here's what looks like the battery, holding a lot of the batteries for the battery pack, and
Mhm.
so they're moving along quickly in the uh, you know where they're being shuttled along at fairly high speed from the machine movement of it, conveyor belts and stuff like that.
Right.
And then here's other engine parts, again, multiple engines, higher density, moving on conveyor belts, moving quickly. Um, Robotic arms moving what looks like, generate engines, and a lot of them, again, high density, a lot of things being done in parallel for that.
Mhm.
Um, this is from that other video, and there's a similar scene in the main video that seemed to be definitely showing the YL from Tesla. It seems to be some drying of paint or drying of a coating on a body in white. Um, and then there's an area where they're moving many, many partially finished car bodies overhead very quickly, and there are some people in this photo. But again, every time that they're showing scenes of it, it's a lot of machines, high density, very fast movement of parts.
Right.
So, it's seems to have gotten some level of unboxed process in there, um, and more robotization, more speed, um, more adhesive, more of a partial movement to the unbox process. And then in a video of a um, YouTuber going into a German factory and talking with um, Tesla workers at the German factory, they talk about the competition between factories and how they all will adopt the same processes. And in some aspects of efficiency, the German factory is competitive with Shanghai, and that they can go up to from 60 cars being sent out um, every 60 seconds, and they say they can go down to 39 seconds. So
Mhm.
they can increase production a lot if there's demand. So that goes to um, production can increase. They are going to unbox. That will eventually, the question of how long the transition, and then um, clearly going to apply unboxed for CyberCab, and that's a completely pristine process where they can go fully to unbox fewer parts, and they can get to that really high speed of maybe one every 10 seconds initially, which could ultimately lead to 100,000 cars per month, a million cars per year, something like that. So,
Yeah. Okay. All right. Thanks for that update. I don't know if you have any other things on Tesla. I wanted to talk about a little bit of Jensen and Wang stuff.
okay, go ahead.
So, NVIDIA CEO Jensen Wang said today about his company's new investment in xAI, $2 billion as part of a total of $20 billion that xAI is raising, of
Hmm.
which they're going to spend 16 billion, I guess, on Memphis.
Hmm.
He says, the only regret that I have about xAI is that I didn't give him, meaning Elon Musk, more money.
Right.
Everything that Elon Musk is part of, you really want to be part of. Well,
Hmm.
he gave us the opportunity to invest in xAI. I am delighted by that. That's an investment into a great future company. So I'm hearing a lot of conversation. You probably are too, from some of the podcasters and some of the CNBC folks. Everybody's all like, oh, it's the circular thing again, like we had in the 90s. This company's investing in that company, and that company's buying their stuff, and blah, 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 blah. Okay, I'm just going to say, um, I don't have any issue with it.
Right. I've actually done a few deep dives on
Okay,
this.
all right, okay.
So, NVIDIA is worth about 4.6 trillion dollars in valuation. They have about $60 billion in cash, and they added about 15 to 16 billion dollars in the last quarter in their cash thing. So, and that's growing,
Yeah.
right? They're adding more each quarter. They had, I think their first quarter this year had 25 billion actually, because of some lumpiness, accounting, whatever thing happened. Um, so they can easily generate close to $100 billion in cash over the next 4 quarters,
Yeah.
right? So then, and that's going to keep growing. So then it'll be like 150 billion, 200 billion.
Even let's just use 100 billion. Let's,
Right, right. So the $100 billion they're going to invest in OpenAI is um, in combination with them every gigawatt of chips that they buy. So they will buy, um, so if OpenAI buys a gigawatt of chips, so 500,000 chips, right? That would be um, probably $40,000 per chip is like $20 billion, something like that. So then they would then, you know, turn around and invest some. So it's going to be profitable. Basically, they're selling chunks of their company to get Jensen's chips,
Yeah.
right?
Yeah.
And Jensen's got the cash to do it, right? And so long as they get to profitability and have utility from their stuff, and enterprise revenues are growing like triple. AI enterprise revenues are tripling, even though it's still not to the level of all the investment,
Right.
right? It's it does it's not like it's going to be a complete dud. It's not like pets.com, right? Where it's like you dump in 200 million, then you get nothing out, right? It's, you're dumping in 100 billion and then you're getting back 30 billion and that's growing to 100 billion in 2 years. So it's a lag, but it's still happening. And then for NVIDIA generating all this cash, they could buy back their own shares. I think they did. I think they
Yeah. Yeah.
briefly bought back $25 billion worth of their own shares, right? So that's all great. And it's, everyone loves when you buy back shares, but you can also invest in your ecosystem
Yeah.
to grow because the ecosystem needs to grow. And by ensuring the ecosystem grows and they become profitable companies, then it's like you're the heart of a conglomerate of companies, right? So it's only a bad investment if they don't, the things you're investing in don't become profitable and they go
Yeah.
bankrupt.
If they fail. Yeah. Yeah. And they might. And
Right.
so if this was an investment in their suppliers,
Hmm.
buying a part of a supplier or buying most of a supplier or controlling amount of the supplier, nobody have any question. That happens all the time, right?
Right. Right.
So this case is where they're buying a customer or buying part of a customer, uh,
Hmm.
and buying maybe a substantial amount of the customer. I mean, I look back and it's not exactly, it's not exactly analogous, but Mercedes-Benz bought some of Tesla a
Hmm.
while back. If
Yeah.
they held on to that investment, I think it would have profited them more in the last 15 years or whatever than all of the profits they've made as a company.
Right. All the value of their company, there would have
Right,
been multiples of that. Right.
right, right.
So I think it's a question of are these good investments? Will they pay off? And the other thing would be that if um so they're spreading their bets into many of them. Because if they do $100 million and I'm only putting $10 billion per gigawatt into OpenAI.
Mhm.
So they have to buy like, multiple times. They're going to buy 200, $300 million worth of stuff. And then I put in $100 million, to kind of like counteract that activity. OpenAI still has to raise more money. They have to do more stuff. They're only co-investing with this thing. Then let's say OpenAI loses to xAI, right?
Right,
They can't raise the funds. So then what's happening is not that they will fail, but that NVIDIA probably just scoops them up on the cheap
right,
and then takes them over,
right.
right? And then they diversified and then they could run it better or something like that. So it's like a vertical integration of like Tesla swallowing up xAI or something like that, where you merge the company together. And it's just a question like, do you believe that you can make the AIs and do the AI generate that value? And things you always can pivot from training models to inference,
Yeah.
and then, you can still make money that way. So I think there's many, many outs where it can work. And then spreading their bets among all of the um,
Customers.
customer ecosystem
Yeah.
is like if we're saying if there's a consolidation, right? Like if we were spreading our bets in the .com era, the internet stuff,
Mhm.
if it was Intel or Microsoft, you know, investing in the companies that are buying from them to create those machines, the servers,
Right.
etc., and they spread your bets around, even if 90% of the companies die and there was a small ones, the 10% that was in Amazon, everything else would all pay out,
Yeah.
right? So it can all still work even if you have a consolidation collapse phase. Because if you say this whole industry will be more valuable, will be better, it's 10x internet, then the fact that you're investing in the whole ecosystem, because they're spending a lot of cash into a lot of different areas. And for them, they're almost doing it for free because that whole
Because their margins are so high.
because they're still being it's still being plowed back into buying
That's,
more picks and shovels from them,
yeah,
right? So the currency that they're spending is not pure cash,
yeah,
right? And it's because that they have the circular loop of which people are really freaking out about is that I'm so profitable, I'm generating all this cash, I'm investing, and they're buying from me, and I'm still doing this thing. Even if some of them blow up, the fact that the other ones win, I'm getting chunks of them, and I think it'll end up being a highly profitable investment for them because it's do you believe that the AI thing is good or not?
right.
Even if some companies, many companies can fail. Yeah.
Yeah, so that's kind of you kind of actually beat me to the punch on that one, Brian. We're just hanging around too much. We're just thinking of
Yeah.
too much alike. So I'm looking at all these AI companies, and some people are saying, well, it's like the .com. And I'm like, no, I was there during the .com. I was spending money on .com businesses that I was trying to start. A lot of money. I spent $100,000 on bicyclemall.com, and then that went away. We couldn't make that work. So what we have here, if it's at all like the 1990s, would be that we have a lot of companies starting up using AI to, what do you want to call it, undergird, to be the basic, the foundation of the companies that they're trying to start. So my question is, okay, I'm sorry, let me keep on going. So maybe there's 1,000 companies, I don't know, 10,000 companies that start up and people are giving them 1 million and somebody's giving this guy 10 million and this guy's getting 1 billion and all these companies are starting up and there's 100,000 of them and 90,000 of them die, kind of what you just say. 90,000 are like, well, that was fun. Let's go try something else. But 10,000 of them, like in many, 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 many um, startup situations in tech, those 10 make up maybe multiple times what the 90% caused in losses.
Right.
Moreover, you've now got this massive group of entrepreneurs who have been tested. They have thrown it all in. They know how to sleep under the desk at night. They know
Yeah.
how to, work 90, 100-hour weeks. They know how much fun it is. They've developed those relationships like the PayPal mafia. And those relationships last forever. I mean, the PayPal mafia guys are practically running the world now.
Right.
So, all right. So all that to set up this. Is there enough monetizable business out there to justify it? For the internet, there was
Mhm.
massive monetizable business in Google, advertising, et cetera, et cetera. Go down the list, YouTube, and then YouTube. I can remember when they thought, there's no way. Why are they buying YouTube? How are they going to monetize it? Oh, man. They
Yeah.
monetized it, all right. All right. So
Yeah.
is there enough monetize? Is there is there visibility on enough
So
monetizable?
so it goes to I think I'm not can remember the exact terms that Cern Basher used, but he talked about making things in businesses or activity into um, commercial um, share incorporated companies, right? So your beverages. So people were drinking water and drinking tea, and that was for free, right? Because you didn't have bottled water.
Yeah,
You're just drinking water from a stream or a lake or whatever like that,
right.
and then you drink that. But then people came up with refrigeration, and they came up with aluminum cans, and they created Coca-Cola, right? And then you created $100 billion business from beverages, right? And then the beverage industry, became bigger and bigger. And then they figured out even bottled water. And people kept
And
saying that,
tea. And
and
tea.
tea, MT. And so they figured that stuff out. And then you created stuff like Starbucks, creating
Yeah,
more expensive
right.
coffee that people
Yes.
drink. People don't say that that's, not sustainable and stuff like that. So that goes to things like labor. Right now, people get salary and only a tiny fraction of that is incorporated in something like the consulting companies like Arthur Anderson or Deloitte or something like that, where the salaries of certain people gets into a tradable form, where it's in a big company where you have 100,000 people
Right.
or in that business. But the vast majority of that, $40 trillion, is not in incorporated companies. So then if you create something that's more profitable, like humanoid bot,
Mhm.
right, and higher margin, then suddenly this tradable, they become the tradable thing incorporated, and then you have companies that are $100 trillion because you took something that was a $40 trillion activity, converted into something that's 40 trillion, 20 trillion in profit or 200 trillion in profit
Right.
per year. And then you have a multiple of that to create $40,000 trillion worth of a company, right? So their activities, and then can you make them into companies? Can you convert things that are low margin to things that are high margin? And then by doing that, if you had 2% margin, you go to 20% margin, then the value of the company goes up like 10 times. Just like, Coca-Cola could be $100 billion company or like that. And then you get to these $1 trillion companies like Nvidia, where it's like you're taking $200 billion of better chips and then making more profits out of it. So to your point, to your question, yes, we can create the value, and there is opportunity to do that, especially if you apply AI to intelligence, to things that may not have been incorporated, and things that were lower margin to higher margin. That changes the calculation of the value of everything.
Yeah, Tom Lee was saying this morning that back in the 90s, when we were first getting the whole internet thing and really getting the computers at really great levels, or even into the 2000s, that Morgan Stanley thought that they would really be reducing their analyst desks.
Mhm.
And
Yeah,
it turned out that all of that just made everybody so much more productive that you hired more analysts so that they could do more of that productive work.
right.
And that's what Tom Lee, at least, that's his feeling, is that's what we're going to see again, is that very same analyst now will be worth 10 times what he is now. And
Mhm.
if you got a guy that was worth 100,000 and now he's worth 1 million, how many more of those guys do you want? A lot.
Right. And then if business scales from a $100 trillion economy to a 10,000 trillion economy, 100 times more, then certain things will scale.
Right.
Like analysts, you previously were analyzing $1 billion, and then now you're only 10 billion, but the 100 billion activities, and then you need to have 10 more people, even though you're 10 times as productive analyze all the things. And it's more a matter of like being able to be accountable for decision of I'm gonna bet on this activity, and just the um, the side bet act, like in a Vegas casino, just like the opportunity to get a bit more money means that there's a job there. There's a business because you know, all these whales are betting all this money, and so much activity is happening. Just the level of activity means that there's more to do, more ways to make money.
Yeah. Yeah. All right. Okay. Well, that's kind of yeah, good. I like that. Let's see. Yeah, the XAI 20, I did. I mentioned that already. Okay, the $20 billion round. So that was very interesting that they've got this new round. Nobody's said yet what it's going to be valued at. People were
I
talking,
heard 200 billion,
that was a couple of weeks ago when Elon said, nah.
right.
But
It's
he was
probably higher.
well,
Probably
he
higher.
was right. He was right, and it wasn't 10 billion. It's 20 billion.
Right.
Although some of it is borrowing, apparently. Uh,
Right.
all right, so let's see. So the economy, we've got the continuation of the government being shut down. And I saw a headline this morning that said, this is the most relaxed government shutdown they'd ever seen. It's like,
Hmm.
everybody's like, yeah, it's shut down. And
Right. Right.
Other than air traffic controllers, which seems to be a bit of an issue right now. So watch out for your airline stock because they're losing billions right now, but on the shutdown. But other than that, I haven't seen any real disruptions.
Right. We're getting used to it. It's been so often that these things happen. So yeah.
And I asked Grok this morning to analyze all of the Fed commentary so far this week because there's been a lot. And Grok said that 50% of the Fed people are 100% for two cuts, and 50% are 100% for one more cut, but a little bit concerned about the second cut.
Okay. So
So,
basically we have one cut in the bag, the next one,
right,
and then the question of whether we get the third one or not.
happens next, yeah.
Right.
And so I thought that was interesting. This is another use for Grok. I could have never
Mm.
done that research. There's no way. I mean, it would take
Mm.
me 100 hours or 1,000 hours. I don't know to go
Right.
through all those Fed, minutes and or not the Fed minutes, the Fed videos and listen to what they say. And yeah, I mean, okay, not 1,000 hours, maybe 10 hours. But anyway,
Time you didn't want to spend.
it was 10 hours and Grok did it in 5 minutes, so
Right.
that's a good one. I've got one more that Grok did. I want to share this with you. And for those
Mm.
who didn't watch my show this morning, it'll be new to them too. So one of the biggest issues with whether or not the two standard models will sell or not, the one that stopped me in my tracks, and I'm like, yeah, yeah, that makes sense. People kept saying, well, it was such a good deal to buy a Model Y 2 weeks ago. Everybody that wanted one bought one. Why would they now be even slightly interested in spending $2,500 more on a stripped down model when they could have bought this other one just a couple of weeks ago? So I started thinking about that and I thought, well, does everybody make a decision far in advance? And I
Mm.
thought about my own history of how I bought cars, and some of them were very far in advance. I was like months and months, almost a year in advance on my first Jag. It was like, I want that Jag, I want that Jag, I want that Jag. Here's what I got to do to get there. Other times, it was I'm driving by Acura in 19, what was that? 1990, I think. No,
Mm.
1970. 1970. No, that's not
No,
right.
no, no, no. Actors were in
1990.
97.
1990. Drive,
Yeah.
19 even 88, I think. When it first came out, the first year, I'm driving by, we're just out getting dinner and driving by, there's an Acura dealer. I
Mm.
pulled in, bought one.
Mhm.
Okay. So not everybody knows that they're going to buy a car next week.
Yeah.
They haven't even been thinking about it. It's not even on their radar yet. And you know what the biggest group is? People whose
Uh,
cars have been totaled.
right, right. Totally. Yeah.
Okay. So I asked Rock, how many cars get totaled every year?
Hmm.
5 million in the United States alone. That's
Right.
14,000 per day
Yeah. Right.
of people that were not planning to buy a car,
Yeah.
and all of a sudden they got to buy a car. So there you go. There's
Right.
a there's plenty of market out there for
Mhm.
people to be surprised that they're going to buy a new car.
Yep. Yeah. Happened to me, where a car, it didn't total, but it broke down. And then it just, you take it in as like
Yeah,
not worth fixing.
right. $500. Here you go. We'll
No,
give
not $5,000. It was like
no, no,
2,000.
we'll give you $500 in
Yeah.
total.
Right.
Right.
Right. Yeah. Yeah. So that kind of, I think, decision happens a lot. And also, not everyone qualified for the tax credit. It
Right.
would, you have over 300,000, joined up whatever account, individual 200,000. And if you're buying the higher end Teslas and stuff like that, you weren't going to qualify.
Yeah.
So, yeah.
All right. So what about the numbers, my good friend? Tesla was up 1.29% today and down 0.31 in the after hours. So overall, I'd call that a fairly flattish day for Tesla after being so volatile last night. And then going to my favorite subject, the bonds. By the way, if you, I should really put it in the notes below, or I should put it in a card above. This Tom Lee video, if I can find it, that I watched this morning. I didn't know, Brian, there is an entire methodology that I was completely unaware of timing equity purchases based on the movement of the bonds. And
Yeah.
that's what Tom Lee, that's kind of where he started in the
Mhm.
90s. He was in the bonds, and he was in a part of whoever he was with at that time. And that was their deal, is they had this strategy that they used. And that's what got him famous to begin with, was some of the plays that he made doing that kind of, here, the bonds just do this. Okay, we need to buy stocks.
Okay, good.
Anyway, that was surprising and shocking me. I'd never, ever, ever heard of that. Okay, let's see here. Let's get speaking of the bonds. So the bonds are down another 8 basis points in the after hours. We're down to 4.123. That's nice. 4.123. So I'm still saying 395 by the end of the month.
Sounds good.
Sounds good. You like that? Okay.
We broke through 4,000 on gold, so we're gonna break these round numbers. So I think.
Yeah, okay, but wait a minute. Here we go. So that's not good, because I said we would not break 4,000 on gold.
Okay, fine.
Okay, so we're at 4,044. So I will still count it as a go, as I did okay, if it only stays for a couple of days and then goes back down again. I just think we come too far too fast.
Things happen.
Things happen, huh? Okay. Oil is down a little bit. Natural gas is up a little bit. Not anything really significant here. Pretty much in the same range they've been. And then we've got Bitcoin. Okay, Bitcoin back, taking another shot at all-time high, 123,340. I think the high was around 125, right?
It was over 125, yes. It got over 125.
125. So is it going? I'm sorry to keep talking about Tom Lee, but he is kind of the Bitcoin guru out there. He thinks
Actually,
that
he's more the Ethereum guru because he's
now he's the Ethereum guru, right? Yes.
yeah, yeah.
Yeah.
So he was saying 200,000 on that, which
By the
Bitcoin's
end of
going
the
to
year.
run by the end of the year. Bitcoin's going to run. I'm more thinking it'll be like 150,000, something like
So you think it's still a really good buy right now.
that. Mhm.
Okay. And then Ethereum, so it's up a 1.39% today. Ethereum, not quite as much, only up 0.99. But I think Ethereum is also right at very close to all-time high.
Mhm.
My recollection, I don't remember exactly, but I think so. Okay, and the equities, flattish. Dow up 0.06, S&P up 0.08, and NASDAQ up 0.14. That's not bad. So therefore, I think these are, wait a minute, let me go back. I don't know if they're all-time highs, but they're very, very close to all-time highs.
Yeah.
So all three of those. So yeah, everything's at all-time highs except for Tesla. We need Tesla to jump back up into the all-time high category again.
Yep. Yep, definitely. Well, we have a little less than a month to the November 6th meeting. So I think two good opportunities for things to really go well. Um, and I think there's still news to drop, on robotaxi, FSD, and other things like that. Because we could get 14.2 in like a few weeks. I think he was thinking to move that up,
Yeah.
so.
Yeah. Phil Beisel will be on next. He'll be on around 7 o'clock tonight. So everybody should watch that show for sure. He and I took an extremely, well, okay. What happened was is that Phil got a repost from Elon
Hmm.
on a detailed post, a deep, heavy duty 5-point post. Elon said, yeah, I need to repost that. So that's what we're going to be talking about. What was so useful or correct in this dense post from Phil Beisel? We'll find out at 7 o'clock tonight. You don't want to miss that one.
Okay, sounds good.
All right, Brian, as always, great talking to you. And same for all of you out there.